We have Audra Kondrote from SAVY. She is head of investor relations. Cards, Federico from Lendermarket, you're the CEO there. Daniil, CEO at Estateguru. And Alex Hökfelt, he is head of funding at Gilion. And Tom Hesse from Sopra Financial Technologies. So welcome to this panel. I would love for us to start with a quick intro round. So maybe you can all say a few words about yourselves and especially about the company you're representing today.
Yes. Okay, hello to everybody who are still here in this room. Okay, so my name is Audra. I represent the first peer-to-peer lending company in Lithuania, SAVY. We started as a pioneers of peer-to-peer lending, but now we've grown into one of the country's largest marketplaces, and we offer the widest range of products, consumer loans, housing loans, SME loans, and real estate loans. For the beginning. Okay, thanks.
See, this works? Yeah, okay. So I'm Carles. I'm representing Lendermarket. I'm the CEO. And as most of us here, I'm also a platform. We basically put in common or bring investors from any range. You can start investing with 20 euros if you want to into consumer loans. So that's our product. We're an Irish regulated company, which is, I think, is the one quite unique. But most of our team is also in the Baltics, in Tallinn. Although I'm from Barcelona, I live in the Baltics, which is quite a weird combination. Everyone is asking why would I do this move? But yeah, it's exciting times, I think, in the lending sphere.
Hi, from my side, I'm Daniil, the CEO of Estateguru. Joined the company 10 years ago. So being there from the really beginning, Estateguru is a marketplace for real estate-backed loans across Europe. So I think we started somewhere similar time like SAVY did, or one of the front runners in that sphere. But we have stuck in a single asset class, which is asset-backed real estate loans. And we have soon reaching 1 billion issued loans. And we have around 160,000 retail investors across Europe as of today.
Yeah, so afternoon everyone, Alex Hökfelt, I'm head of funding at Gilion. We are a tech-driven lending platform that supports growth businesses across Europe. To date, we've supported 50 companies with growth loans and operate across Northern Europe.
Yeah, so and last but not least, hi to everyone. Tom Michaelis is my name. I'm here for Sopra Financial Technology. So actually, I feel like a rare species among you all because I'm an IT guy myself and as a solution architect with Sopra. And that's basically what we do. We provide IT solutions for financial service providers. And this is also the link to our very interesting topic today because we offer a brand new crypto solution, not only for crypto trading and custody, but also for crypto-backed lending. And yeah, this brings me here.
Okay, thank you very much. So we have quite a diverse panel with very different businesses from the digital lending ecosystem. And because this panel is called Evolution and Opportunity, I would like to start with the evolution bit and talk a little bit about the past decade and a half in digital lending. Because we have some platforms here that have been around for a bit longer. And we have some very new businesses and business models. And I would like to kick off by asking if you could maybe talk a little bit about your perspective, especially Daniil and Audra. What has changed since you started at SAVY and at Estateguru? And what are the milestones that you can see looking back at like 10 plus years of operating in the space?
Ladies first.
Okay, so we were like really revolutionaries in finance when we started our business. As I told you, we were the pioneers of peer-to-peer lending. And actually, at that moment, there were no rules at all. So our founders worked with institutions to create peer-to-peer lending rules. And actually, Lithuania was among first European countries which introduced strict regulations. So that really make a big impact for evolution, and it brought trust. And in finance, trust is number one. So it helped to build trust. It helped to bring transparency, because at the beginning, of course, investors were afraid to give their money. And actually, the fun fact, and I can say that at the beginning, investors even could see to whom they are borrowing, to whom they are lending money. They could see the name and the surname. So imagine. So it was 11 years ago. So now everything really changed. Of course, I would say we are still like a very regulated country in terms of peer-to-peer lending. But also we are the most mature country. Maybe we didn't grow so fast comparing with other countries, but it was sustainable growth. Because, of course, every platform has to have a license to operate. And for investors is like a playground with rules, with transparency. What also has changed in terms, if we talk about liquidity, what is important to investors at the beginning, of course, this was the main issue, and now we have a very good secondary market if you want to sell your investments. Everything is fully automated for borrowers, for investors, so a lot of things changed.
Yeah, and not to maybe repeat what Audra said, the whole industry, as was mentioned in the early discussions today, is that maturity is one of the key element here. The platforms have done tremendous transformation. Many platforms have closed down, bankrupted, disappeared, and that, let's say, the regulation, the ESCSP license, really affected that strongest, the most established platforms that are doing quality due diligence, are overseeing everything, are staying alive and coming out of that the strongest. I think like 10 years ago, it was, let's say, like Wild West. Everybody were just opening a platform, like every month new platform came in. Investors actually came organically, like all the financial bloggers who I don't see any of them here today. For some reason, maybe they wrote about all the Baltic companies that are now like invest there 10%, 15%, 20%, and all the retail German investors followed that time. And what's happening today, they're not that much bragging about it, and because not many platforms are still alive. The ones that are strong, the interest rates going down. They're becoming more mature, doing much higher level due diligence on the projects, because before regulation, we started as clients came in, we checked the background, we checked the valuation report, and the money was issued, and that has most of the platforms operated 10 years ago, and those, let's say, boutique hard money lenders, and today the ones that are still operating, the level of due diligence the platforms are doing to the regulation and their own, let's say, lessons learned are banking level or even higher. So the maturity is really describing the evolution as all the platforms, and I guess Carlos here can also agree the same thing, that today we see a lot of mature companies, platforms, and that will be the next key element anyways further.
Yeah, so basically maturity means in many ways more disciplined risk management on the platform side. So Carls, your platform is a little bit younger, but has also been operating for a few years. Were you able to capitalize a little bit on that pre-built trust?
Yeah, we opened in COVID times, so amazing time to open a company. Perfect timing. But I agree with not to go into regulation, which is the most obvious. I think not only platforms like us, but also neobanks were taken at one point like a niche product, or not taken into serious, like, this is just for the breadcrumbs in the finance world. And banks were just like we're the big guys here, nothing can move us. But now they can see, as Daniil was saying, that they have 160K investors. We have about 20,000 investors in our platform. It's going to be on those numbers for her also. So it's already something serious to take into consideration in the current times. And yes, we're more regulated, but we also know we have the experience behind, especially in all these Baltic countries, because we have been doing this for years. And that's now it looks new, and it looks like, especially I'm from Spain myself, when I go to Madrid and I explain basic things, they are looking at me like, oh, this guy's an astronaut, you know? And it's not. It's just all this new finance wave is arriving now to the rest of Europe. I was just approached now by a colleague now. It's like, I checked your website. I'm interested in that. And that's actually the effect that our platforms has into the private investor, you
know. Tom, so Sopra has been around for a little bit longer, 40 years. But you are new to the alternative or digital lending business. Can you explain how a company that has been into infrastructure provision has arrived at crypto-backed lending?
Yeah, absolutely. And I think that perfectly fits the title of our panel, because it has a lot to do with the evolution, that you already mentioned. And I can totally relate to what you just said, feeling like the astronaut in the business. And this is a bit, I think, also the thing that drives us to, let's say, to enter new markets, and especially the digital lending market, because what we have seen, I think, for the last decades, especially with the traditional financial institutions, banks, insurance companies, is that they were always very IT-driven companies, but they didn't want to admit that. So that they saw IT a bit as a measure to a means. And I think when it comes to digital lending, the truth is that this changes, and that the digital aspect actually becomes the driver of the business. And this is why we also decided to make offers for that business, and why we are actively developing a solution that enables you not only, to enter the crypto market, but also to use crypto as collateral, because we feel that the variety of the different business models we see in the lending sector will definitely be coexistent over the next years, and this trend will further increase, especially when we look on the market sizes and let's say also on the shifting trends, how investment behavior shifts. And this is why we want to actively be part of that development, and why we also want to open up the digital lending market to traditional financial institutions, because I think they can largely improve their activities in these markets.
Okay. So Alex, your company is sort of the youngest one here on the panel, and in some ways kind of like the last stage of evolution. It's also a bit more niche. Can you talk a bit more about this approach that you have?
Sure. I think it's probably helpful to put the context. What kind of companies we support? So it would typically be a company between Series A and Series B. Very high growth businesses that historically have raised funds traditionally through equity. And equity for founders is obviously dilutive and gives less control to the founders. The product that Gilion has developed, which we call the growth loan, is effectively a bridge to enhance their growth potential before they go into those equity routes. And we form that on the basis of really trusting live data. So the whole concept of Gilion is that you as a company, if you want to be assessed for a loan, you connect your data sources onto our platform, and we're able to make a financial assessment based on that. And of course, based on that assessment, we then monitor the investment and onwards. But I guess the point I'm trying to make is that we've found a little niche pocket in the market, which historically founders have found quite difficult when they're growing very nicely, they're investing in their growth, and they need more capital. That source of capital has typically been quite dilutive opportunity for founders, which we have clubbed through our methodology.
I think that's really exciting, because it really opens up a new way to access financing for these kinds of businesses. Do you think, ultimately technology was at the heart of, all these businesses, but without AI and agentic AI, would this have been possible?
So again, there are three parts in any investment process from our perspective, at least, or credit process, where you need to find a situation, then you need to evaluate it, you need to monitor it. The way that we've built our platform, there's machine learning and AI built in on all these three layers. So if you want to source new opportunities, we have a sourcing engine that goes out and finds opportunities. When we onboard a company and their data, we use the machine learning to forecast performance. So again, we use AI. As it relates to monitoring, we track all those live data points on a daily basis. So to put it into context, we have 600 companies that are connected to our platform, 50 of which have taken out a loan, and which had 1 billion data points a day. That wouldn't have been possible 10 years ago.
So if we look ahead at kind of the technology trends that will drive the industry in the years to come, what role does agentic AI play in your businesses these days? And what are the use cases maybe that you're looking at? Audra?
Of course, without technology, no future, no our business. It's the heart of business. It helps to connect people and capital. And of course, we also use machine-based credit rating system. And of course, I believe that it will evolve with more AI-based things where we explore how we could use more AI. So first thing also is customer support. We may use it for investors to to make more intuitive automatic investment strategies, because now we suggest automatic strategies, but of course AI could personalize that. We already use third parties for KYC and compliance procedures, and it's all AI based. It's fully automated. So yeah, and I think there's more to come, but that's the main chance.
Carlos, do you have anything to add?
Yeah, I think it comes down to customization. So I feel investors are more and more savvy. They need more reports. They need to see more. We were talking actually with Daniil before about this, like how they want to know every single stage of their investments, what's going on with this. So I think that this AI can help on supporting that. At the moment, we need too much resources for that we don't have. To work with data, it's very costly. It's very good, it's very rewarding, but it's costly. So I think that AI might help on that regard.
So basically AI or AI agents as a way to cut costs on that side.
Yeah, I think it's more, if you think about it, we're not going to reduce the due diligence, or we're not going to reduce any of these manual aspects that we still need to do, but it's going to be a help. So I feel the AI is going to be a support on cutting costs, and we can then provide a better return for the investments.
Is that something you're looking at too?
Yeah, just agree with the other panelists here, and then especially the AI definitely helps to personalize a little bit more experience for the end investors. So to summarize long documents and overuse of the investments that let's say the platforms provide. The AI definitely plays a big role in making the things efficient. So we also use many third-party providers that already also integrate the AI machine models, machine learning models, credit scoring, etc. But don't want to be a party pooper. But let's say we do asset-backed real estate lending. So it's for example, issuing a loan of 1 million or 2 million or 3 million to the real estate developer who is building something, and there hasn't been any company yet in the world that has, let's say, streamlined it fully automated way, because in real estate it is really hard. You can probably automate in a way. I think Revolut is trying to do in Lithuania the home mortgages, like trying to automate it in a way, but still, like valuation reports, the element of emotions still plays a big part in real estate transactions. So I think we are yet to see where it will take us, but I think it's everybody's today. I assume people are ChatGPT savvy. Somebody use additional models, somebody research in perplexity and integrate some, I don't know, helping with the marketing side, customer support, but let's say in underwriting and due diligence, it's currently helping as an extra addition, but I would argue that in the 5 years, there won't be any AI agent doing credit decisions to issue a 5 or 10 million euro loan.
No, I agree. And I think the common theme here is efficiency and in the end of the day, we'll come with insight. Right now, that insight and how to interpret the AI output is really still human in the context. So by way of example, what we're building at Gilion now is in any traditional investment process, you will receive an information pack from the company. That might be an Excel model, a management pack, some legal docs. We've built a canvas whereby we can drop all those documents, and our AI agents that we've built into that tool can spit out a summary of all those documents. And that still requires an analyst to go through to make sure that output makes sense. But maybe 3-4 years' time, that will obviously improve. So whilst it's an efficiency, you still kind of need to push that next level of it as well.
Yeah, maybe to add another point, I can fully relate with Daniil, what you just said about taking a loan decision. So I think the preparation of loan decisions is definitely largely supported by AI and agentic approaches. However, I think we also should keep in mind that we have a lot of like regulatory burdens to be aware of, and we have to explain decisions in the end, not only to the authorities but also to the customers. And I think this is the tricky part, where we have to find a balance between what do we want to prepare with AI-based approaches and what will still be the human factor in this decision, also to be able to explain these decisions later. But maybe another thing where I see great potential for AI-based approach, especially in digital lending, is the monitoring and the continuous risk management. And not only to like be faster and more efficient when it comes to take action due to market events, but also to anticipate the impact of market events. And I feel, especially, of course, for crypto-backed loans, that will be a huge topic. For instance, if some president overseas is making another announcement, this also today has a large impact on valuations and on the market developments for crypto assets. And to be here more proactive in handling these impacts. I think this is a large benefit of the technology.
Okay, so what would that look like if we can stay on that topic a little bit? Because to me, it would sound like mayhem, to be honest, if we have AI agents who are forecasting something based on a statement that a certain president may or may not make on a platform. And then you have companies behind it who are actually adjusting their loan portfolios or their crypto assets accordingly, preemptively.
I mean, actually, in my mind, it's quite the opposite. I think it's quite in the, let's say, in favor of the customers to have such approaches in place. Why? Because if you think, for instance, of let's say, a static smart contract, where you write certain thresholds. So, for instance, if my assets drop under 55% of a valuation, they need to be sold. They need to be liquidated in order to repay the loan. But if you can anticipate a strong impact in the market that may or may not be also like reversed later on, you have much more freedom to interact with your customers, and you can say, okay, in principle we agreed on like have a margin call at this threshold, but we know there is a certain impact in the market and we don't believe that will be sustainable, so we don't want to execute actually this call. And I think to come in that position is a great chance of that technology.
So you're talking about basically more choice during the life cycle of a loan. Is that something that this panel feels is going to be realistic in the next few years?
I can say something. I think it's we are not ready yet. So the closest approach we've seen to what AI can do, especially in customer support, you were saying, is those chatbots. And if I ask here how many of you would like to talk to a real person or a chatbot, everyone is going to be like, please, chatbot, no, So I feel that we have the danger to fall into a very mechanized AI, but the advantages of AI is that it will jump that process and will be much more human, let's say. And we might prefer at one point the machine to the human. And that's, I think, where we're going to. We're going to a changing model in our heads where we will trust the machine, where we will put all our savings into a neobank. If now you have Revolut, you have 1,000, 3,000 euros, 200. No one has 100K put into Revolut, or very little people, because they still not trust on this kind of new wave of what's coming. But we see in our platforms, people test waters, they drop something, and then they see that it works, they put more. And I think that in the next few years, we're going to see how all these UBS and all these ones will start fighting to collect or to not let go so many of these customers towards the new wave of AI.
Maybe to add from my side is also that I guess we are not fully ready. We need to look at let's say, also take a step back that, let's say, can bringing the real estate as an example, like how can we think about smart contract of a digital, let's say, asset-backed loan if I take Ireland example, if you have a land registry still in the books somewhere in an archive in a city council, like how are we talking about that things a step ahead if you haven't solved the digitalization of a let's say a land registry like we have in Estonia, that all the properties are added in digital system. You can log in, you can get all the ownership, go back to 20-30 year history, but this is not the reality in the Central Europe. So we are a bit behind that in that sense. So it's I think some things need to be solved before we as a lenders, let's say, start providing. But of course, crypto is a bit different asset class, and but what we see in let's say interested dynamics that we also discussed earlier here with other participants today is this DLT regime that is digitalizing the let's say the bond and the capital market different structures, including the marketplaces. So they're trying to create, let's say, a secondary market, so liquidity for different platforms. So that is something interesting. There are quite many interesting players. I think one is here, it's Niala, I guess, that the guy is there. So disclaimer, not anyhow related to them currently, at least. So, but there are other players like 21X, Axiology, that are in the market that are trying to create this kind of secondary market, and I think this is interesting dynamics because the point is that, let's say, if we're talking about digital lenders or marketplace or here specifically, so every like customers as you are, or let's say institutional investors, you are like part of one company and you're dealing with that company, and investors have to register, create an account on one platform, another platform, and then there is a secondary market, but still inside of that platform. So there should be probably development and evolution going towards that there will be a bigger super apps that are going to integrate those different marketplaces and originators in a one single place that the customer is winning. So this is some development we see now with this DLT new regime in EU, and I think this is something at least we see as a marketplace lenders currently evolving. So
that is not
saying something?
But something interesting that you mentioned in terms of being able to, you were talking about margin calls and being able to see trends and have the conversation with the customer earlier. That's something that certainly we can relate to in what we do, because I think there's so much data available out there, irrespective of which vertical you're lending into. And it's about having an infrastructure to make sense of that data. What it ultimately speaks to is also transparency, because if you can actually interpret the data, provide a transparent outcome from it, you can have a much easier discussion with, in our case, the underlying borrower or the customer that you're dealing with, etc. So I think that's something that we are certainly very excited about, that this intermediation of private information, or lack of other words.
I would be really interested in learning a bit more about the investor perspective, if you can share that For example, I remember that for a long time, institutional investors were quite cautious about investing in especially crowd lending businesses or marketplace lenders, because the argument was always, we don't know, we've seen the risk model maybe, but they haven't been through a full credit cycle and we need to wait for that. But now we have some new technologies coming. Like, are investors like very skeptical about that, or are they like happy to basically trust your agentic or AI first approach?
So,
Or is it like a human underwriter that is kind of like still really important?
Yeah, no, of course. I mean, I think the first principle is that we are held by our tools, our tech, our AI agents, but ultimately the decision making, as we've talked about, is still with the human. There is very little ability when it comes to financial numbers that we use for them to misinterpret it, because we connect directly raw to the data source. So for us, it's just a different mindset in terms of, if we're going to finance companies of that high growth and that profile, we need to track live data. So you can't really sit and wait for 30 days for a management report that reflects what happened last month. We want to know what happened today. And I think that argument resonates very well with investors, and they understand the value of that, because it also gives you an opportunity to act early if things don't go to plan. So investors are very embracing of what we're doing so far.
And you see an opportunity too. And
yeah, I can fully support and relate to that. What you just said, because I mean, obviously, we are speaking a lot with traditional banks, with insurance companies, and the one thing I hear all the time is that they wish for the highest possible level of automation, as long as they still are in the driver's seat for the decision points. So, and I think this is what we, and especially, for instance, we as IT provider, but I think for every startup that now wants to enter the market, I think we need to embrace this wish, to have the human factor as the driver for decisions, but to prepare the humans who will take the decisions to the best of our abilities to take these decisions on an informed basis. And I think this is like a common misunderstanding. Yeah, of course, you cannot like ask ChatGPT, would you grant the loan or not? Yeah, I mean, this is obviously not the goal. Yeah, but the goal is to have all the manual work that today strongly is on the shoulders of analysts, and is a very time consuming and work intensive process, to help there as much as possible with technologies at hand. I think this is the opportunity I see, and I think this is also what traditional institutions have understood by now.
Yeah. So basically, aside the technology that is behind it, it is ultimately the track record probably of the platform that is really the deciding factor. Is that something that you see too? Because I'm guessing that with institutional money playing a slightly bigger role these days than with retail money, these are probably a lot of questions that you've had to brace to in the past years.
Yeah, but actually, of course, I agree to the colleagues, and just what I want to say. Already, all our investors can monitor their portfolios. It's real data. It's not something what happened yesterday. And we suggested it from the very beginning.
So it's real-time data?
Yes. Yeah, they receive their interest rates every day. So they can make some decisions. If they want to grow their portfolio, if they want to sell their investments, it's real data. We provide a lot of reports, but they're always we need to find a good balance, right? Not too much, not too little. So with AI, they could personalize all these reports, what they really want to see. So, I'm talking about retail investors and institutional investors. We provide all kinds of data if they want to do their analyze. So Everything is already here.
Yeah, from my side, I can say also institutionals are, I think that they have, as I said before, when we started all of these companies, well, they are a bit older, but 15, 17 years ago, after the crisis, it was like, this will crash, this will crash, this will crash. And now we're getting bigger. Then it starts getting all this fear of missing out. So I think the institutions now have, or let's say bigger investors have a lot of this FOMO being built up in all our asset classes. Even in crypto, you can see how they are rooting more there. And they were at first, this is like, it's just a tulip scenario, no? But now they see, wait a minute, we have lost like 1,000% growth in the last 5 years, like because we were not believing in these projects. So I think institutionals now, they are dedicating a bit more attention to all this new, the same as us, the P2P lending scene and the platforms that invest in that area. Before it was like, as you said, the far west, no? But now it's, wait a minute, these guys are regulated, they are doing their homework, they are working with real data, the returns are there, so they are seeing like, wait a minute, we need to take this serious. And I think that's a change that we have seen also recently.
Couldn't agree more. It's the same parallel in the way that when we started, and let's say the traditional banks and institutions were probably eating popcorn and looking like how one and another will fail, but today they actually are like fighting to get this the technology actually to get integrated in their own system. So you see, let's say example of Wise that started to disrupt this cross-border payments, and today they are embedded to the biggest banks as well. The banks actually use the technology in order to provide this more streamlined exchanges and transfers of the currencies, and the same goes for every other aspect. So the platform based, let's say the lending, the origination, underwriting. Then I think today the banks, the traditional, let's say institutions, they respect and understand that we are here to stay. The fintechs that have evolved, have grown, have created a big user base, that they have actually find their niche, and in order to not to be behind, they need to actually adapt it. So Revolut today is one really huge institution already, and I think I've seen examples where, let's say, the UK banks are using the neobanks infra and the whole technology behind the let's say the startups IT solution, and build their like own e-bank system based on that. So it's now it's inevitable to let's say that we are now, let's say, considered already as a mature players, mature market participants, and we are taken serious when previously we absolutely weren't.
And maybe just one further example, because it matches very well our discussion of, let's say, maturity. Yeah? Just for the crypto market, because I have the numbers at hand, and I think you all are numbers guys. Just last week, I heard the recent numbers of Post Finance Group in Switzerland for the crypto market, and it's quite impressive. Yeah, just as one tiny spotlight, yeah, on this digital lending topic, because they said from our total assets under management from customers, like 37 billion Swiss francs, over 1 billion only in 2024 was outflow because they had no crypto solution in place. So this is like nearly 3% of their assets under management went away because they could not offer crypto. And I feel it will be the same, yeah, for many other aspects of digital finance and digital lending in particular. And unfortunately, I think we are a bit late to the party in Europe, yeah, as usual. Yeah, I think Switzerland and also US is much ahead here, yeah, and had a head start with all aspects of digital lending. And I think it's really time for us to buckle up on that and to get our share of that market.
What's the reason, in your opinion? Regulation, the fragmented market again?
Yeah, I think it's so really in my mind, but of course this is now also a bit talking with the perspective of traditional finance in mind. Regulation plays a big role, yeah, and nevertheless also the IT systems, obviously, yeah, because if you are today a traditional bank with an old core banking system like from the COBOL ages, yeah, like 50 years ago, crypto feels like science fiction to you, yeah, and it feels like something that you can maybe spell but definitely not bring into your books, yeah, and of course this is a thing that we have to overcome, yeah, and I think to be honest, this is maybe now also a very German specific view, yeah, because I think especially in Germany, traditional banks are very traditional also in respect to let's say asset classes. But I think this impression is true with some differentiations for the entire European Union. And I think, for instance, Switzerland is an example, yeah, how you can be more advanced when it comes to digital assets.
Okay. Coming back to sort of like the crowd or peer-to-peer lending platforms. So, what have you seen, Jay? So the investors or institutional money is basically flowing in more readily because you have a track record. There was the level of trust that was mentioned, maturity of the platforms. But can you tell us like what role investments through your platforms plays for an institutional investor, like within their portfolio?
I don't know, like in that sense, like if our institutional investors who are also investing in Estateguru, like where do they invest else as well? But I think it still plays quite a small percentage in their portfolio, in their books. As we just discussed as well, that let's say now we are becoming more and more relevant to them, that they analyze, they take it seriously. This is Europe-based view. I think in the UK, this has been much more evolved and advanced model where alternative lenders get let's say funding facilities from the traditional banks, funds, and family offices. But I think this field is now actively growing. We heard it as well today earlier in the discussions that if the platforms and let's say originators per se can source and originate really quality backed deals, loans, then it's an interesting asset class for the institutional investors as well. But I'm not the institutional investor, so we probably need to ask here in the audience as well. So
I could add, because of course we feel a bigger interest of institutional investors in the recent years, and not, I think, of course, maturity of the market. And of course, we shouldn't forget about the returns, right? Actually, we have a return and quality ratio. And nowadays, of course, uncertainty, instability is a new normal. And consumer loans, housing loans, all kinds of loans suggest fixed returns with ability to manage risk. Because, of course, we can suggest for the most conservative type of investors to the most aggressive type of investors certain laws. So I think, this is also a very important factor. And at the moment, institutional investors amount to 20% of all our investors. And we see a potential for bigger portion.
Would you like to add something, Carlos?
I can always add something, but I mean, I think it's where we were talking. I think they allocate already a part of their portfolio is already focused on crypto, on let's call it more risky assets, and also what kind of interest is they go shopping, and when they see that the interest rates is decreasing in some places, and they see, like as I said before, when you have a 7% given secured from your bank, you're not going to go to any of us. But when you get a 1%, then you start checking and you start seeing, okay, maybe I should take that risk and get the cut. And also, time goes very fast in investments, and when you realize it's like 1 year has passed, and you're like, I could have, FOMO kicks in. So, and that happens also not only for private investors but for also institutional. So that's why I think we are seeing more of this institutional money coming in, because they can see that it actually works.
Yeah. So we have an economic environment that has not been super friendly, and it looks like it continues to stagnate economic growth in Europe. And now we expect interest rates to go down. So what does that mean for your business? Will you be able to continue to grow? And if so, how? To satisfy the investor interest, retail or institutional?
Well, it's as we've been, let's say, from personal perspective, over 10 years in the market, we have seen the hyper growth. We have seen the COVID times, the energy crisis, and so on. So, as they used to say, there are opportunities in every market timing, let's say, or a moment. So, investors, at least what we see is if we look at the platform or lending activities, then it's a big price war of lower rates. So let's say the borrowers, the clients who wish to raise financing, they're shopping. So they apply to 10, 20 lenders, and usually they pick where is the cheapest, which is of course obvious. But then they play all the other aspects like flexibility, some other terms. But eventually, there's a really big price war. So of course you need to keep your head sober in the opportunities if you think about the marketplace's other side, the investors. So you shouldn't be following to get the borrower with the lowest interest rate just to get him over, but if it's a risky deal, so you need to do the strongest due diligence over the clients, over the borrowers, or the projects, and provide opportunities to the investors, the retail or institutional investors as well, that are fully analyzed, strong, and make sense without, let's say, sacrificing on the quality and going after the price war. So what we see at least is a price war happening, at least in the Baltics, and which is understandable because there are quite many market players that are also evolving, maturing, and let's say looking to increase their volumes, and although all those, let's say, market participants and lenders are fighting for the same clients eventually. So
yeah, I could add that talking from economic perspective, Lithuanians are among those with the lowest levels of borrowing, and so there's also big potential in this market. And for example, last year, peer-to-peer lending market grew by 25% compared with total credit consumer market growing 11%. So it's peer-to-peer lending growing faster than total consumer credit market. And of course, there's big competition in interest rates, in prices. But on the other hand, still investors can get really good ratio of return and quality. And also, I think Baltics are still very good markets comparing with other European markets for the returns.
Yeah, and actually what we has, if you've been in all these different sessions today, it kept appearing a common topic, which was savings are at its highest, like so much savings. That makes sense when there is good returns in your savings account. When there isn't and there is high inflation, we'll know what's happening. So yeah, we're expecting still, I think that there is a lot of growth, and I think that all of our platforms will be, or the whole business will be benefiting from this kind of situation.
Is there a consideration of geopolitical risk at all, talking about the Baltics?
I mean, yes, there is, and there is of course the geopolitical aspects,
there are no tanks driving around the Baltic states. Like if somebody still, I have spoken literally with people who think that they're like, I don't know, bears walking around the cities of Tallinn or Riga and the tanks, but it's not the case, just to convince you. And so we've been living with that, let's say, about 3 of us here, minimum of 3 years already. And well, I think wouldn't be anything to add here. We know that there is a country neighboring us, that our aggressor country, but we're still in the EU, we're in the NATO, and so we have to continue living our own lives anyways, and that's nothing to add here.
As I told before, uncertainty is a new normal. I mean, everywhere in the world, there are the geopolitical risks, so we can't ignore that.
Yeah. Okay. I think we kind of have to come to a close. So I think maybe we can reserve a minute or two if there are questions from the audience and all for our panelists. Anything we haven't covered? Yeah, please.
Do you guys think that the word crowdfunding has an image problem? We're talking investor interest or institutional investor interest for private debt, digital lending and stuff. The crowdfunding directive is called the crowdfunding directive. I think many platforms use it, and I think it still be associated with either equity investments or sort of for good investments to help support some local initiative, and less with a professional private debt setup.
Thank you.
Yes, actually, yes. I think there is also a bit of stigma even at some points. And for example, for us, when we chose the crowdfunding license in Ireland, we did not know exactly if we fit there, if we don't fit. So we need to choose one. But yeah, I agree with this. For some investors, crowdfunding is mainly equity only, but the crowdfunding spectrum it's huge. So yeah, I agree with this. Yeah.
Good question, and the topic raised, and probably agree in some sort. We also striving and moving towards let's say digital lending, naming of us, and let's say not crowdfunding. But yes, there are crowd lending, there are P2P lending, so the many terms, eventually more or less same. But yes, I think this industry is also evolving, and at least we are striving to move towards, let's say, digital lending terminology for ourselves at least. So,
of course, so we can't ignore that peer-to-peer lending, crowdfunding is a new thing, right? 11 years and maybe something in the Baltics, totally maybe 15 years, something like that. So, of course, that's why this is this conference and a lot more.
In a way, you can call banking also as a crowdfunding. You have the customers bringing the deposits, and then the banks are issues the loan, right? So also crowdfunded industry. But
and maybe one aspect towards this crowd lending topic in particular, I think here it strongly depends on the loan type. For instance, when it comes to anti-money laundering issues, and this is a well-known topic in crypto, obviously, it really depends whether then, for instance, a peer-to-peer or crowd lending approach is suitable, because I think for smaller ticket sizes, that's no issue. But when, at least from a customer perspective, when you come to larger tickets from a retail perspective, like let's say 6 figures, this really changes, yeah, because if you have like a lender list of 9 pages, yeah, with 50 or 100 different wallets where the money is coming from, it really becomes an issue to ensure that this, for instance, that the travel rule can be applied for all the origins, yeah, of where the money comes from. And in that sense, I think this is something where I believe we will see all the different approaches in the future, yeah, because I think there is not one size fits all, but I think for smaller tickets, for instance, peer-to-peer is a very valid approach and will work fine. And I think here we also don't have like these large image problems, but when it comes to larger tickets, I think the financial institutions will play a bigger role.
But maybe the smart contract is going to change that. Any other questions from the audience? No, then I will say thank you very much for this discussion round, and thank you for listening.